Sack SingPost executive welcome inquiry. SingPost announces Neo Su Yin as Group CEO. Now, if you are a person residing in Singapore, you have read the news regarding 3 top executives who are being fired from SingPost. So now the question is SingPost a good investment to start with? So let's understand how SingPost make money. So if you look at this diagram over here, you can see SingPost has 3 revenue sources, and for 67.7% of the revenue comes from logistics such as cross-border e-commerce, Australian market, freight forwarding and so on. And because I'm not really in the logistics field, so even if I read, I may not understand. But of course, most people will understand the second component, which is the post and parcel, which takes up 29% of their revenue source. And the last one, which is the least important, is their property investment, which takes up about 3.3%. So this is roughly what they do. And if you look at it from another visual representation, you can see these are the revenue stream. But what caught my attention was the number on the right over here. And the number is actually 4.6%. And what's this 4.6%? This 4.6% is actually the company's net margin.
It simply means for every $100 of revenue,
and then you deduct all the expenses off, what is left is simply $4.60. So from my perspective, it seems that the business is a very thin margin. But let's go into detail by looking at their 3 financial statements. So let's focus on the first financial statement, which is the profit and loss statement. When a company makes some form of money through sales of their products, services and so on, is known as revenue. Minus away all the expenses, you end up with 2 numbers. Positive number, the company is profitable. Negative number, the company is running as a loss. Now, if you look at the company's revenue, right, it seems to be okay because it's positive and then it's uptrend. But bear in mind that revenue is vanity and profit is sanity. So let's look at the company's profit over here. So you can see that even though the number is positive, but over the years it has been a downtrend. So from a value investing perspective, it's really not a very good sign. But again, let's look at the company's net margin. Now, if you look at the financial year 2014, you realize that the company's net margin used to be on a high side, which is 20.32%. Every $100, you minus all the expenses, what is left is $20. But you look at the most recent year, which is a financial year 2024, net margin is only 4%. Downtrend. So not so good. Then how about looking at another financial statement, which is the cash flow statement. Now for the cash flow statement, there are 3 components. So let's focus on the cash flow from the operation. So what we expect is we expect the number to be positive and then to be uptrend. So is it uptrend? Now if you look at this graph over here, do you notice that the graph is again downtrend? So at this point, if we ponder for a moment, is the company really a good company to start with? Maybe I could share with you a very quick metaphor, right, given by Warren Buffett, the #1 investor of all times. He once described that a good business is a good horse that's being ridden by a good jockey. So now the question is SingPost a good horse? Or is it a good horse but is managed by a bad jockey? Now, let's look at this diagram over here. This one is very important. So you realize that since October 2011, right, until December 2024, this horse or this SingPost has actually been taken care by 4 different jockeys or the senior management, starting from Dr. Bayer, then followed by Mr. Mervyn Lim, then followed by Mr. Paul, and then last Mr. Vincent Pang. So do you notice that regardless who is the management or the rider, you realize that the company doesn't seem to be doing very good. So right now the problem is it the horse or is it the person who is riding the horse? Now, back to this slide, SingPost announces Ms. Neo Su Yin as the group CEO. So hopefully when she really take over the business, she could really turn the company around. So for those people who have a SingPost shares, or if you think of buying SingPost, should you do it? Now, let's look at this graph over here. Now, before I start, just to let you know that the share price in the long term correlates with the movement of the company's net income, which means that if the net income falls, share price in the long term will fall. So let's say you have bought SingPost at 190. As the recording of this video, the share price is about 56 cents, which means that your price, unrealized loss is about 70.5%. Yeah, so you're here. If your thinking process is, I want to hold on, maybe one day the company will turn around, which means that in order for the company to turn around, the price has to go up by 239% in order for you who have bought here to break even. So now the question is, do you think the company's profit will go up by 239%, so that the share price can go up by 239%. So I shall leave this stock with you. So let's do a quick summary. Number one, SingPost revenue has been increasing, seems to be good, but the rest, profit, net margin, cash flow, right, has been decreasing. So I shall leave this stock with you. Please feel free to comment on this video politely and respectfully about your thoughts about SingPost, and I shall see you in the next video. See you soon. Goodbye.